Hello, my name is Jasmine Regala. I'll be walking you through a financial analysis of Spotify over a period of 3 years from 2022 to 2024. We'll look at key financial trends, profitability metrics, and what these numbers say about Spotify's performance and growth outlook. Spotify's business operates in three primary verticals: music streaming, audiobooks, and podcasts. This product diversity helped the company tap into various user preferences and broaden its revenue base. As of December 2024, Spotify had 675 million monthly active users, what they refer to as MAUs, 263 million premium subscribers, which is their paid customers, and is utilized across 184 countries and territories. Not only does Spotify have varied stream of business products, but they also have a varied user profile, audienceship, geographic footprint, and revenue opportunities. This strong base is the foundation for revenue growth and scalability. Now, looking at Spotify's net income, we see their profitability. In 2022, Spotify experienced a net loss, losing 3.7 for every 100 of revenue. In 2023, another net loss, losing 4 for every 100 of revenue. Then in 2024, there was a sharp increase where they had a net profit. Spotify had a profit of 7.3 for every 100 of revenue. This is captured in their profit margin changes from year to year. From 2022 to 2023, Spotify saw a slight 0.4% decrease in profit margin, but 2023 to 2024, there was a strong 11.3% increase. This turnaround suggests major improvement in cost control and monetization strategies. Now, let's look at their revenue and expenses based on Spotify's income statement. We see a consistent revenue growth from 2022 to 2024. Revenue is rising steadily with a 13% growth in revenue from 2022 to 2023, and then jumps to a staggering 18% growth in revenue from 2023 to 2024. In comparison, expenses had a steady growth as well, but at a much slower rate. 1% from 2022 to 2023, and 4% from 2023 to 2024. This shows that revenue is growing faster than expenses, revealing that Spotify is improving their operational efficiencies. Other contributing factors include subscription price increases, user growth in their premium, aka subscription model, higher ad revenue, and podcast monetization. Now that I've shown you net income and growth in both revenue and expenses, here's a chart that clearly outlines where these items fall on an income statement. You can see Spotify's profitability trend is growing upwards. Operating margin moved from negative 5.6% in 2022 to negative 3.4% in 2023, and then into the positive at 8.7% in 2024. Gross profit also improved each year from 25% in 2022 to 30% in 2024. This indicates that Spotify covered its direct costs better and also strengthened its core business operations. In addition to improving their operational efficiency, as I previously shared, they continue to be a leader in their industry, expanding their business offerings. Not unsurprisingly, Spotify stock also sees a rise in price and mirrors the revenue and profitability growth we just reviewed. Please focus on the steady growth of the stock from 2022 to 2024. We also see the earnings per share, which increases from 2022 at negative 2.08 to 2024 at 5.81. This shows its market value growth. In this slide, we use the DuPont analysis to determine return on equity. ROE was negative 17.9% in 2022, worsened slightly in 2023 to negative 21.1%, then soared to a positive 20.6% in 2024. This shows that in 2022 and 2023, the negative ROE indicates net losses where Spotify was not generating positive returns on shareholder equity. However, in 2024, Spotify had a strong turnaround with the positive ROE, significantly improving both profitability and assets, enhancing shareholder value. The last of our financial analysis highlights the strength of Spotify's balance sheet. The debt to equity ratio decreased from 2.31 in 2023 to 1.17 in 2024. This shows reduced leverage, less reliance on debt financing, and an ability to meet long-term obligations. The current ratio improved consistently from 1.24 in 2022 to 1.29 in 2023, and then to 1.88 in 2024. This shows Spotify had better liquidity and stronger ability to meet short-term obligations. These improvements show Spotify is managing both its liabilities and cash flow responsibly. Here are Spotify's key takeaways. Spotify experienced 18% revenue growth, an 8.7% increase in operating margin, a 20% boost in return on equity, and stronger liquidity and solvency ratios. Spotify is a financially healthy company. It's showing not only growth, but also sustainability. It's managing costs wisely and expanding its market and services. The financial analysis reveals that Spotify is on a strong upward trajectory with profitability, growth, and efficiency all improving. That is the end. Thank you so much for listening. Greatly appreciate it.